What's going on, traders? How are you doing? Today I'm back with another video. This is Shocks and this is ShocksCapital FX YouTube channel. So if you are new here, guys, we talk about market maker, we talk about ICT, we talk about institutional trading. So if this is something which you are looking forward to learn, explore, and just research about, this is the channel. I would appreciate your like and your subscription. So let's get right into it. So today we are going to talk about peaks. So we are going to identify peaks and we are going to talk about how to trade peaks, the best way of trading peak formation high, peak formation low, or that cool stuff. So we are going to do this using a clean chart. We are not going to use any indicators in doing this. So we are going to use a clean chart and try to get what we can from what we are going to see on our charts. So number one, a peak formation. It's a bit the market make. It's a BTMM concept. So we are going to first explain what a peak is, and from that we are going to explain how we can be trading a peak. A peak, it's more like a reversal area, the summit or the lowest part of the chart. So when they say sell high, buy low, they mean sell from the peak and buy from the peak. So if you are selling from the peak, that is called a peak formation high, and if you are buying from the low, it's called a peak formation low. So I want to explain something, how you can be trading these peaks and identifying them as you go about it. So we'll be starting on explaining what a peak is and how to validate a peak. So rule number one. So I'm going to be doing level counts, and I'm going to count my levels using the periodic method, where we are saying days and weeks of rise. So here we are on H1, and I'm going to use the method of counting what days of rise. So this is day number 1, right? Then this is day number 2, right? And this is day number 3, right? So you are going to validate a peak after 3 to 5 days of rise or drop. 3 to 5 days of rise or drop. So these days of rise or drop is what you sometimes call levels, right? So you are going to be counting levels in a way that you are counting your periods, right? So if you are on H1, you are going to be counting what? You are going to be counting days, right? As you can see from this picture, you are going to see that we have 3 days of rise. So on H1 we are going to be counting days, right? Days of rise. So as you can see from this picture, what I've just marked right now is 3 days of rise. So from these 3 days of rise, we are going to say that after the 3 to 5 days, we are going to be expecting a peak formation high, right? We are going to be expecting a peak. So we are only expecting. So we are not going to enter our trades after level 3, right? This is level 3 or day 3. So we are going to actually wait and confirm the peak formation high, so that we can be executing our trades from that. So as you can see from this one, we sometimes, so there are numerous types of peaks and types of peak formation highs, peak formation lows. So but for the sake of this strategy, or for the sake of this video, we're going to be identifying the double top and the double bottom, the M's and the W's only, right? So from what you are seeing here, we are seeing that we have this kind of a thing. So the first leg, when the first leg is logged in, the first leg, the move from the first leg has to break structure, right? It has to break a structure or to break a low like this. Then you mark the high of the of the first leg, like I have done here. So what you are going to do is you are going to expect price to do a stop hand on top of this high like this. You are going to expect price to kind of stop hand on top of that leg. So if we are having something like this, let's say this is a price, and this is the first leg that takes out this structure like this. So the structure is taken out like this, and you mark this high, this top like that, you are going to expect price to come, maybe just go beyond this high a bit and go down like this. So this is what you are calling the first leg, and this is your break-off structure, which confirms that price has made a decision to go down. Remember, we're just counting levels and just saying this is a high probability area of price turning, right? So after 3 to 5 levels of rise, you are expecting price to take out what? To take out this low. When price takes out this low, that's a confirmation of a decision to go down or a decision to turn right here. So after this is done, you are expecting price to go back to the what? To the peak or to the first leg like that. You are expecting price to go back here, just go above a bit, then go down. So what are you waiting for? You are waiting for this red candle to present, then you execute your trade. This is the confirmation which you want. So you are not going to try to get a sniper entry here. Remember, we want two confirmations. The first confirmation is the break-off structure right here. Then the second one is the retest of this high. So sometimes it can just throw a pin to this high and throws a red candle and goes. So this is something which you need to be looking out for. And if you enter here, your stop loss goes above the structure. Let's just measure how much was this. This was 28 pips, and you are targeting what? 100 pips. So you'll be trading like this, and so this was a very big candle. So sometimes you would want to see price maybe just getting back to maybe 50% of this first candle and minimize your loss or your risk, right? So if you enter the peak, you are exiting your trades at the next peak, or at the point where these levels started from, like in this area. So you are kind of trading from peak to peak, right? But this is the pattern which you need to see before you execute your trade. So this is the kind of formation or the kind of a peak which you need to understand. So as price is moving down with you, you will be actually counting your levels. After level 3, you are out and you are taking your money. So this is how you are trying to get these peaks. Let's go to another pair. So this is NZDJPY. Let's look at this. So from this, we are saying we validate a peak after 3 to 5 levels. So if this is on H1, we're looking at something of this nature. Level 1, that is day 1 of drop, day 2 of drop, and day 3 of drop. So from day 3 of drop, I'm gonna just remove this marking of a level so that you can understand what is happening in this area. So what are you going to do here? You are going to wait for what? For a break-off structure like this. After 3 levels, you expect price to turn. So what are you waiting for? You mark your what? The low, the high, which you are expecting price to take out, and you mark the what? The high, which price would have presented, the high or the low, which price would have left before breaking this what? Breaking this high you see in this picture. So this is the pin I was talking about. So you wait for price to throw the pin right there. So that is your stop hand. So you wait for the stop hand through the what? Through the first leg. So this is the first leg. So if you are to draw your W, you are going to draw it like this. You are going to draw it like this. You are going to draw it like this, and this would have been your peak formation low. So this is the piercing which you are kind of waiting for, right? So after this, you wait. Then after the printing of this blue candle, that is the confirmation number 2 for you to enter your trade. And from this trade, we are kind of risking how much? We are risking 20 pips, and we are going for more than 200 pips. So as you know, I said you'll be counting your levels as your trade is running. So this is day 1 of rise, day 2 of rise, and day 3 of rise. So this is what you are doing. And after day 3 of rise, look at what price did. It was just consolidating. Expect a reversal after every 3 to 5 levels of rise. So this is the break-off structure. After break-off structure, what are we marking? We're marking our first leg, and you are waiting for price to throw a pin or just pierce above the first leg and form that candle like this. And this is your entry, and your stop loss is going above the structure. This is 20 pips, and you are going for minimum 60 pips for 1 in 3, right? So this is what you are doing. And if you are to look in this area, what is happening right now, we have day 1 of rise, day 2 of rise. So this is not being counted. Why? Because this retraced back to where level 2 they have been started. So this is level. We are counting this as one level, right? So this is just one level. So we are saying this is day 1 of rise, day 2 of rise, but we are counting this and this as one day. Why? Because there is no absolute movement in this area, and this would have been our day 3 of rise. So after day 3, what are you waiting for? You are waiting for price to break a low like that. So you are waiting for price to make a low, break it, and maybe come back to this area, confirm your bias, and maybe you will be entering here. So this is the pattern which you'll be waiting in this area after level 3 or after day 3. So from day 4 onwards, you'll be waiting for this kind of a pattern. So you need patience to actually wait for that kind of a pattern to present, because it takes time. So from this one, you are saying level 1, right? Level 2, and this is level 3. So what are you waiting for after level 3? You are waiting for that pattern. You are waiting for price to take out a high in this area, which it will form, then come back and maybe pierce through the first leg, or maybe throw a pin to it and confirm with a blue candle. Then that would be your entry. So let's look at this chart. What was happening here? This was GJ. So on GJ, we are saying we have day 1 of rise, day 2 of rise. So we are having day 1 of rise, day 2 of rise, and day 3 of rise. So from day 3, we're having price taking out this structure. You see, price took out that structure, and this is the first leg which we would have marked. And if you want, you can even mark order blocks in this area so that you trade it like we do on this channel. So if you don't understand what an order block is, you can just go and watch our videos on on order blocks on this channel. So you can just search the playlist on this channel, or go to the playlist named order blocks, and you understand what I'm trying to get across to you. So when you enter this trade here, you are just counting your levels: level 1, right, level 2, and level 3. So this is your level count, and this is what you are currently doing. So this is how, guys, you identify your picks. So number 1, you validate a pick after 3 to 5 levels of rise or drop. Then after that, you are looking for that pattern or for that fractal which I have been showing you on how to actually enter and get these moves from a chart. So guys, it's been a pleasure. Thank you for watching. I hope to see you in the next video. I'm Shocks, and I'm out.